We'll get back to the next one. Australia's biggest electricity retailer is Origin Energy, and it said its underlying profit soared from $44 million to $747 million as markets normalised after last year's abnormal weather-affected coal and energy prices. Origin's revenue fell 9% to $8 billion. The dividend was up by 11 cents to 27.5 cents a share. Well, Origin increased its full-year profit guidance. Ed, I don't have to be a rocket scientist to work out this one. It went up, didn't it?
It did go up. Look, Origin shares had a great day, really after a strange 6 months for the company, which, of course, was capped off late last year by the failed $20 billion Brookfield takeover. Shares today, though, soared about 2.5%, Ross.
OK, and let's go to Australia's premier winemaker, Treasury Wine Estates. The owner of Penfolds, Wolf Blass and Wynns said half-year profit is down 11% to $166 million. Revenue grew just 0.4% to $1.3 billion. Dividend, it was cut by a cent to 17 cents. Treasury Wine has struggled in America with brands including 19 Crimes because of strong competition, plus also a shortage of premium grapes. It's also affected clearly by China's punitive tariffs on Australian wines. Its Hong Kong business, though, was picked up, but it's now not making plans for the tariffs to be cut anytime soon.
The review of tariffs on Australian wine remains ongoing, with a determination anticipated in late March. We are prepared and we're well placed to re-establish ourselves and our Australian portfolio in China should the review result in the removal of these tariffs.
Look, Ed, there was a bit of a muttering today. I listened to the analyst call here about 2025 earnings. They were worried about it, but they seemed to give Treasury Wine Estates a pass for the moment, at least anyway.
Yeah, look, bit of a reprieve today, Ross. Treasury shares did jump today. It is worth noting, though, they're still trading about $7 below where they were back in 2019 before the Chinese government put that trade ban on Australian wines. They were up about 3.25%. But turning to the overall market, the ASX 200, it opened high this morning. Most sectors in the green, tech stocks and property REITs, they were the top performers. Market jumped about 0.8% today. And the top performer by a mile was Aussie tech company Altium. Its computer software is used by engineers to design and build computer circuit boards. And this morning, Altium accepted that $9.1 billion takeover offer from Japanese tech company Renesas Electronics Corporation. It soared almost 29%. Other top performers included the fund manager Magellan, which reported its results and appointed a new fund manager to lead its asset management division. Commercial and industrial property manager Goodman, that jumped after upgrading its earnings guidance. And medicine maker Mesoblast, it closed higher after one of its drugs was given a special designation by American regulators. Health imaging company Pro Medicus got smashed after reporting a 33% increase in profit, but investors obviously wanted more. Whitehaven Coal slumped after slashing its dividend, and mining giant BHP, well, it dropped after announcing a $5.4 billion write-down on the value of its Western Australian nickel business. Since the end of last year, BHP shares, well, they're now down roughly 11% from their peak, Ross, and that's markets.
Yeah, thank you so much for all of that.